You're listening to Knowledge at Wharton on Business Radio. Here again is Dan Loney.
Welcome back. Hour number 2 of Knowledge at Wharton here on Sirius XM 132, Business Radio, powered by the Wharton School. Thanks for spending part of your day with us. It is the 25th of September as we come to you from Philadelphia. Great having you listening wherever you are around the United States or up into Canada. Coming up here in hour number 2, we'll have our number of the day, and then we're going to delve into the resignation of WeWork CEO Adam Neumann. That came out just several hours ago that he was going to be stepping down. We'll talk about why he made that decision now. Part of it, obviously, is the status of the company right now, which was going to get set to have an IPO. That was put on hold. The valuation sank significantly. We'll talk about the resignation of Adam Neumann as CEO of WeWork coming up in just a second. And then we'll be joined by Dan Conway, author of Confessions of a Crypto Millionaire, My Unlikely Escape from Corporate America. He'll be joining us coming up at 11:30 Eastern Time. All of that in the second hour of the show. The way for you to join in is either by phone at 844-WHARTON, 844-942-7866, or if you'd like, send us a comment via Twitter, either at BizRadio132 or my Twitter account, which is at Dan Loney, Loney 21. First, though, our number of the day, and our number of the day today, $1.2 million. News just coming over in the last few moments that Boeing has settled the first claims stemming from the crash of that Lion Air 737 MAX jet in Indonesia. Sources saying that the families of those killed will receive at least $1.2 million apiece from that crash. Mr. Floyd Wisner of the Wisner Law Firm said he has settled 11 of his 17 claims against Boeing on behalf of families who lost their relatives when a brand new MAX jet crashed in the Java Sea on October 29th, soon after takeoff, killing all 189 people aboard. The claims are the first to be settled out of some 55 lawsuits against Boeing in U.S. federal court in Chicago. $1.2 million, our number of the day, the settlement number that Boeing has reached with families that those were killed in the Lion Air crash back in Indonesia. Adam Neumann, the CEO of startup WeWork, has resigned his position after a tumultuous few weeks. During that time, the pending IPO for the company, for the office sharing space company, was delayed, and the valuation fell from $47 billion to, in some estimates, around $15 billion. The focus throughout the last few weeks has been on Neumann himself, particularly following a profile in the Wall Street Journal, which, among other things, described him zipping across the Atlantic on a private jet, smoking marijuana, and making statements that he wanted to live forever or be president of the world. Neumann is being replaced by WeWork's chief financial officer, Artie Munson, and vice chairman Sebastian Gunningham, who will focus on marketing and technology. Neumann is staying on as chairman of the board. So will the company try and restart its IPO at some point in the near future? To discuss the move, we are joined by Dave Erickson, a senior fellow and lecturer in the finance department here at the Wharton School, and also joined by Haran Segram, who's a clinical assistant professor of finance at NYU Stern School of Business. Dave, great to have you back with us. Haran, great to have you back as well. Thank you both.
Thanks, Dan.
Good morning, Dan. Good morning, David.
Thank you. So give us a sense of why now do you think, Dave, that this decision to pull out as CEO was made?
Well, I think it probably has to do with the conversations that they had preliminarily with investors about the IPO filing and some of the pushback that they got from investors around some of the issues raised around governance and Neumann's behaviors and so on. And so I think they've tried to take a very active approach in how to address some of those issues with the hopes of probably trying to continue the IPO process sooner rather than later.
Haran, your thoughts?
Question again, please, Dan.
Well, why do you think now why is it now that Segram, or I should say that Neumann is making this call to step aside?
I think it's a bit too late, but there's no other go. Neumann being there with his previous 20-1 voting right, which has been brought down to 3-1, it was causing, as David said, tremendous corporate governance issues for we company. So it is about time, and I think it's too late, but at least they come to the decision because it's destroying value. As you mentioned previously, $47 billion to maybe, if they're lucky, $12 billion of valuation today. So 80% destruction in value. It's about time they acted.
When you look at the potential of doing an IPO, Haran, at this point, do they need to give this some time to kind of redevelop their base and their support from investors before they think about actually going public?
If I were advising them, not in the next 6 months. They should delay it, heal this company, gain more investor trust before even thinking about going IPO. I don't think IPO is the way to go for this company at this point in time.
Dave?
I agree with Haran. Ideally speaking, they should wait, and that would probably be the best advice. But it seems like they need the cash, and the fact that they named the replacement CEOs or co-CEOs as permanent, even though there's been some reporting this morning that there's potentially searches going on, suggests that they would like to do the IPO sooner rather than later.
Yeah, I guess a lot of people, Dave, have a question of just how strong this company actually is at this moment. Well,
it's kind of an interesting situation because they've obviously built a significant franchise of locations and got some of the largest tenants in major markets like New York and London and Hong Kong and other major markets. So they've obviously built a significant brand. They've obviously also seen significant value destruction in the last month or so since they've unfortunately had to air their dirty laundry in public. And we've watched this in real time since they had their filings and their public filings in mid-August, and with all the reporting that happened even before that, I think it's become a very challenging situation. So there's, as Haran said earlier, there's been significant value destruction here. The question now is, what do they do going forward? Because they clearly need the money.
Right.
The good news is they produced $2 billion, close to $2 billion in revenue last year in 2018, as reported in their S1 that they filed in August. But they also lost $2 billion, almost $2 million. So clearly they need the cash sooner rather than later. And, we'll see how things transpire from here. But it's, get your popcorn ready because it's going to keep going.
Well, Haran, then what should the new co-CEOs really focus in on, at least in the short term?
Healing the company, Dan. That is the major thing for them. The company is a sick patient, so they have to revive the patient and bring the company back into good health. That has to be with new corporate governance measures in place, talking to the existing investors. Masa's son is a major investor, as you know. He put in $10 billion at a value, not $10 billion exactly, but last round of investing was at $47 billion valuation.
Right.
So if you think about it, he has lost a ton of money. So they have to, and I'm glad Bill from Benchmark VCs is on board. He's a very astute investor. So if you think about the drama playing out, Benchmark and SoftBank were major investors in Uber, and they are also major investors in WeWork. So they're up against the corporate governance of Kalanick in Uber, and now with Newman here. So it's an interesting series. It's a sequel.
Dave, obviously the focus will be on WeWorks, but remember, this is part of a bigger company right now, and I guess to a degree, this may also link into kind of the overall assets and process that we company has kind of been working with over the last couple of years.
Yeah, no, I think it's they've addressed the governance piece, right, that they heard from investors. I think, as Haran said, they need to fix the company, and the company, part of the other pushback that the press has reported on and I have heard is investors were concerned about the business model, right, and so signing long-term leases and then leasing out to tenants on short-term basis, obviously there's a mismatch, and we've talked about this, I guess, a couple weeks ago. So I think there's obviously some business model considerations that probably need to be taking place as well in the near term And I think, I guess the reporting was that Neumann's wife is also stepping down from one of the subsidiaries. And so my wonder is, does that mean they're going to start refocusing the We company on really the WeWork's business and stop some of these other We growth and some of the other things that they were starting to invest capital in?
Right, because part of the overall operation, Dave, from what I understand, also includes a private elementary school that was in this operation.
Yes, exactly.
Haran, your thoughts?
Yes. To be frank with you, Dan, I feel this company should remain private for some time, shows that they can survive the next recession, because this is, end of the day, it's a real estate company, so I would consider them similar to CBRE or Simon Property, the anchor tenants, right? So as David mentioned, liabilities and assets mismatch is a huge deal when a company is facing macro events such as recession, right? Tenants are signing up for short-term to 12 to 14 months, and these guys have leases with their lessors at 10 years. So that is where the mismatch is. So recession, they have to survive a recession and prove the business model that this can survive, and then they should go public. If they rush it, I think it's going to be a misfire.
David, is the recognition that it wasn't time for the IPO always a bad thing? I think that's the association that something failed significantly, but I think you both have kind of alluded to that there are structural elements of both WeWorks and We Company that really need to be focused on in order to make this a better company moving forward.
Yes, I mean, I think they obviously heard a lot of feedback from the investors, and unfortunately, they're kind of in an awkward situation, I think, or a very awkward situation right now, because they need the money. It's clear, that they were trying to raise $3 billion through the IPO, or at least that's what was speculated, and alongside that, they were going to get $6 billion of bank financing, assuming they completed the IPO by the end of this year. So if they aren't able to complete that IPO by the end of this year, then maybe the bank financing is not necessarily available. And again, it's what's been disclosed or reported and things along those lines that, you're wondering what their next steps are. And I think if they had their druthers, they would do what Uber did after Travis Kalanick was exited from that firm, which is they'd wait, they get a new CEO, they spend a year and a half to 2 years, they rebuild trust and all the other things associated with infrastructure, and then come to the markets. Unfortunately, I just don't think they have that luxury from a financing standpoint.
I completely agree with David's point there. They have to rebuild the trust, and I also understand they're strapped for cash, but if they rush it, they're going to burn value further. They have to find some sort of financing to survive. I know if the cash balance they have, they cannot survive for more than 18 months. They have to renegotiate with their bankers. So JPM might come to their rescue, or Masa-san to invest further funds. Trust in this company is a good business. Right. Because if Masa-san's thesis was right, he was investing at $47 billion. I'm sure he sees value in this business.
Right.
So private investors should come for their rescue, or renegotiate the deal with JPM or the major financial institutions to survive this period. And David was right on the money, saying they have to find a permanent new CEO, preferably from external CEO, and heal the company for the next 2 years before thinking about going public.
I get. Haran, excuse me, interrupt. I think that's an interesting distinction you bring up there with Masa Son of SoftBank. And an investor can obviously have a feeling about a company, which may be a little bit different from the feeling about the CEO. And that's in part what we're seeing here. Masa Son may truly believe in the potential of WeWorks as a company, but maybe just under different leadership.
That's exactly right. That's why he pushed him out, because he was part of the group, as I mentioned before, pushing Travis Kalanick out, right, from Uber. And again, the benchmark and Masa-san or SoftBank group, they're trying to push the CEO out because they truly see some value in this business model. But they say under this leadership, this is not going to survive, so we have to bring in somebody and heal the company.
Dave, does this also maybe throw out a warning, and I guess with Travis Kalanick it might as well, to entrepreneurs and to the leadership of some of these startups, that the investors do have an incredibly important voice that will speak when it needs to be spoken?
Yeah, no, I think the public markets have spoken, and especially this year around some of these highly valued private companies coming to market and going public, and needing to adapt to the parameters of a public company. And governance is one of the many things that investors look at. And unfortunately, it's kind of been devalued over the last several years by so many companies going to the high vote, low vote structure, and even in the case of Snap a couple of years ago, doing a no vote structure that they went public with. And so I think it just reinforces that good governance is still one of the important criteria that investors look for.
Haran?
I'm very glad this is happening, Dan, for the public markets, because I lived through the 99-2000 dot-com, zero interest in revenues or zero interest in earnings. At least now we are realizing a company should have a good business model. They should be generating some revenues and good corporate governance in play. I don't want 99-2000 to happen again. So capital markets are being reasonable and paying for new IPOs coming into the market.
But with all those properties that WeWorks is involved with, Haran, how strong are they doing right now? Because as you both have said, they've got a lot of properties that they are involved with in very important large cities around the world at this point.
The question to me, Dan?
Well, how strong is this company right now because of the fact that they have all of these properties and they are in some very influential cities around the world?
I feel the business model is still reasonably good. And they have, as David mentioned, London, Hong Kong, Chicago, New York, major markets. So they have to see how well they can turn the revenues into profits. And I feel they can do this in the long term, but they have to be patient with it. It's going because it's an asset-intensive business.
Right.
It's not like Uber, where they're working off of an app. So asset-intensive businesses, it takes time to realize profits.
Dave, your thoughts?
I have friends that are WeWork customers, and they love the service and the offering that they have. But that, and just like there's lots of great products out there, but in some cases, those great products don't necessarily make great public companies.
844-WHARTON is the number to give us a call, 844-942-7866, or if you'd like, send us a comment via Twitter, either at BizRadio132 or my Twitter account, which is at DanLoney21. We're joined on the phone by Haran Segram, who's of NYU and the Stern School of Business, Dave Erickson from here at the Wharton School. Again, 844-942-7866, or if you'd like, send us a comment on Twitter, at BizRadio132 or my Twitter account, which is at DanLoney21. And playing off of what you just said, Dave, the year of the IPO that we have seen in 2019 up to this point hasn't exactly been a strong one, to say the least.
Yeah, I think the biggest IPO, there was the biggest anxiousness or excitement around the Uber IPO, which at that point was the high, second to Alibaba when it went public. It was the highest valued private company coming to the public market. So there was lots of anticipation about the Uber IPO, and obviously it hasn't materialized in the public markets. Lyft, the same thing. And even where Slack did a direct listing, it's, the Slack stock is trading significantly below where it listed. So, if you just take those three significantly highly focused names that the market looked to as really the quality in the class, and WeWorks was in that conversation, it's just... If you're looking for support from the broader markets based on the investors' experience in those, that obviously is lacking at this point.
Haran, will this have an impact on IPOs, maybe at least in the short term?
Definitely. I would would think other IPOs would be delayed to some extent. They'll put the feelers out to the public markets, and they know they cannot leave the public holding the bag end of the day by undertaking a liquidity event. Right? Imagine this business has gone at $47 billion public.
Right.
We'll be holding the bag. I'm glad that Masterson is holding the bag because he has made a ton of money with previous investments. So if the bubble brews in the private market, I'd rather see the bubbles burst in the private markets rather than in the public markets. So Uber not doing well, Lyft not doing well, Slack, you had me on when Slack went public.
Yeah.
From the day of listing, they went up to $38. They have lost 40% value from the highest value they were fetching. So it is a good lesson. And I'm glad that we are being rational investors rather than momentum investors, which, as I mentioned, which happened, you all know, in 99, 2000.
But by seeing a potential slowdown in IPOs, what impact does that have on the markets themselves, Haran?
I think it's good for the markets. So we won't have this overflow or transference of overvaluation from private markets to public markets. I think that is a good thing, and I feel this is good news for public in general, public stock investors in general.
Dave, your thoughts?
I think what this does, this potential impact, I think, is if you were on the board of a significant privately valued company looking to go public now, you would be making sure you tick the box on good governance and some of the issues that have been highlighted here. And if there's anything that needs to be addressed, you want to do it now before you start the IPO process. Because as Haran said, I think it's going to be a cleansing it's going to be better for the public markets because companies are going to be better presented going forward. Because with what WeWorks went through, you don't want to be trying to change a tire at 60 miles an hour. Which is kind of what they've been trying to do with all these various changes since their initial filing, because they need the money. And so I think it is good for the public markets, and hopefully it will slow down some of these more aggressive governance and other valuation metrics and things that really need a little bit more scrutiny.
But it's an important component when you look at the governance of a company and what's being done and how the people in charge are really taking charge at that point. It does make me wonder at times, especially since we see these CEOs starting to resign in certain situations, and obviously they're not all governance situations, but in many cases they are, of how closely governance truly is watched, Dave, on a day-to-day basis.
Oh, no question about it. I mean, you saw this morning the CEO of eBay stepped away. He's not even going to be on the board, and there they have an activist shareholder that's been involved in terms of Elliott Management. So I think governance is becoming much more of a topic that is and the activists have been very no pun intended. Activists have been very active in pursuing companies that have not performed very well and don't have great governance, and so. Unfortunately, when you have these structures with high votes, low votes, that prevents some of the investor activity to be more aggressive. But at the same time, hopefully, even those companies will learn from this and develop better governance.
Haran?
I feel the major contributor to this is cheap money, almost free money. People were taking aims at any opportunity and hoping 1 out of 10 or 1 out of 100 would pay off. I think everybody has learned a lesson out of this process, and things would improve from now on. I felt when I was looking at these companies about a year ago, this voting structure is not going to be an impact on valuation, but now investors are pushing back, and this is going to be very important, having 20-1 and 30-1 voting rights. It did not destroy value a year ago. Now it's going to be a big concern, and it'll be part of the valuation process going forward.
I would think also, Haran, that this is an important time as well for the investing community in general. And obviously you can have a great love for an idea to put your money in, but unless you have that corporate structure in place that's a good one, some investors may want to rethink it.
100%, Dan. You're totally 100% right on that.
Dave, your thoughts?
No, I agree. I think we're going to get better governance out. That's one of the lessons learned with the we process. I think there's going to be better governance emerging. No question about it.
What is your expectation then to see, Dave, we will see from WeWorks in the months ahead?
More drama. Is what.
Really?
Well, I personally think if they try to go to markets, which it seems like they might be trying to continue the process because they get back to they have the potential bank loan capital available to them through the end of this year, and not to say that can be renegotiated, but it's out. They know it is there at least through this year, or at least that's what's been reported. So if they try to force it out, I think there's going to be much more consternation from investors because unfortunately they don't have a blank piece of paper. We've all seen and lived this history that they've gone through. And they're getting to a better place from a governance standpoint, but you've seen this track record now of just not great governance. And so, so if they try to force it out, that's one where we're going to continue to see more. If they were able to get capital to sustain themselves for the near term and not, go private and withdraw their registration statement, that obviously would be the best solution, I think, for long-term value. The question is, do they have the ability to do that?
Haran, your thoughts?
I feel they have to secure some private funding. If they were to go public right now, Masa Son would take a actual loss on this investment. And so I think it is in their best interest to support the company through this period and get them sort of into a better place. Think about the IPO at least 6 months down the track. Don't rush it. I don't think it's prudent to do that from the company's perspective.
Gentlemen, thanks very much for your time. All the best to you both. Thank you again.
Thank you, Dan. Thank you, David. Bye.
Thank you. Dave Erickson from here at the Wharton School and Haran Segram at NYU and the Stern School of Business. We will take a break. Our final 30 coming up in just a minute. After the break, we'll talk with author Dan Conway about his book, Confessions of a Crypto Millionaire, My Unlikely Escape from Corporate America. He'll join us next. Sirius XM 132, Business Radio, powered by the Wharton School.